Well, this is indeed a Vikas ka budget. The last budget of the government before the election cycle, a budget which was really based on Vikas, a budget which has ensured that the economic momentum continues, a budget which is high on intent, big on vision, and a budget which really captures the essence and the necessity what will be required for India to really become a $10 trillion economy soon. It could be called as one of the shortest speech of by any finance minister, but it's a speech which was high on impact, big on intention. No changes to both indirect or direct taxes. It was not expected. But what is important here is that in terms of commitment, which is what markets should look at. Number one, fiscal deficit numbers. Much lower than what markets was expecting. Number two, the commitment towards capex, it's still a double-digit number. And C, really getting India ready for what the future should be in the world. I think this budget, in my book, has really ticked all the right boxes. It was not specific, Aisha, in terms of announcements. It was not in big in terms of setting the in really setting the nuts and the bolts right in the short term.
Yeah.
High on intent, promise of stability, easy to decipher, and it's a budget which really sets the tone for not next 1 year, not next 5 years, but for next 30 years.
Oh yeah, absolutely. And even the FY25 capex outlay which is announced, I think that to my mind really sort of stood out. The fact that it's at 3.4% capex to GDP, that in itself is a mighty figure. Now, what one needs to see is whether that's a tall order or not. We'll try and decipher the math a little bit more for you. But I think the phrase of the day was FDI, first develop India. First develop
India. We always looked at, India as FDI always meant global help, but right now FDI actually has got a different meaning. So, the whole word Atmanirbhar Bharat, I think the Atmanirbhar Bharat now is really it is in sync with what the vision of the government is. So, this budget is big on intention, and now I think the next budget would be high on implementations in terms of the specifics. I just want to mark the markets here. We've got a budget wall for you.
Nothing is happening in the market, Nikunj. I don't know why, but these numbers, both on the fiscal deficit or the capex outlay, it's not moved the needle at all, at least at an index level.
So, Aisha, this budget was not expected to move the market at all because, this budget was, in a sense, A, vote on account. There were limitations and restrictions. B, the budget policy over the years has been quite transparent. So, if you call it as a budget where, frankly, if you ask me what were we debating, there were two debates in the morning that local economy is strong and global economy is looking slightly uncertain. How will that balancing act move? In that, the finance minister has ensured that India is getting future ready by sticking to the fiscal deficit glide path, ensuring that the capex commitment is high, no tinkering in terms of direct or indirect taxes. Then I should whole good old debate. Okay, it's vote on account. Will it be populism which will take over? There's no mention of any large schemes. There is
nothing on taxes.
No, taxes were obviously nobody's expecting anything, but the whole point that okay, rural economy is under stress, they'll have to do something, there would be big dole out, there would be something to farmers, there would be something to the rural economy, maybe some popular scheme. Nothing of that sort until unless I've missed something. So this is the budget. I think the reason why markets are not moving at all is because when the event risk is behind us and when the expectations are low and you pretty much get things on expected lines, then we'll be back to earnings. It'll be back to numbers and valuations. Normally the budget is like a earlier, Aisha, budget used to be a 1 month event. Then it became a 1 week event. Last time it was a 1 day event. I think total will be a 60-minute event from a market standpoint.
Absolutely. Let's take it across to Sunil Singhania and find out what he's making of these last 60 minutes. Sunil, what's the first take?
Frankly, nothing was expected, frankly. I think the most excited were the media guys. And, it's a vote on account. Anyway, as Nikunj was mentioning, over the last 4-5 years, the relevance in terms of major decisions in the budget has been reducing. And I think at least as far as we were concerned, we were expecting the same to be carried forward. It's a vote on account. And even if it was a full budget, we just expected what was being done over the last 3-4 years to be carried forward. So what was being done? Obviously fiscal prudence. I think there's a little bit of surprise with fiscal deficit target of next year coming at 5.1%. I think the bond markets are already reacting to it. To some extent, that would be positive. Also, all the statements which were made over the last 2-3 years by the government and by the Prime Minister have all been reinforced. So whether it is housing for all, the new solar rooftop generation for 1 crore households, focus on infrastructure, the plan expenditure increased from 10 lakh crores to 11.1 lakh crores. I think it's all in the direction of what was happening over the last 2, 3, 4 years. So I think it's business as usual, and I think that is should be taken very positively, because I think that is what long-term planning in a vibrant democracy, in a fast-growing democracy, is all about.
I also have, Prashant Jain, and his voice, his idea, and his differentiation part really matters. So, Prashant, so nice to have you. You've got your firm's name is 3P, but everybody's added a 4th P to it because you have invested in PSU stocks. So, has the budget done enough to ensure that the 4th P of your investing, which is PSU stocks, that's been taken care of?
Okay. 2 seconds.
Nikunj, thank you for having me. And I think, see, PSUs are represented in core sectors of the economy. And greater focus on capex, infrastructure, railways, defense, make in India. I think all of these are good for PSUs, and there are absolutely no surprises in this budget. This is a very good budget in my opinion. As you mentioned, bulk of the policy reforms, big changes are behind us. So no change is good. And Indian economy is doing extremely well despite few headwinds that it has been facing. Fiscal deficit is steadily coming down, which is a headwind for growth. And despite that, we continue to grow well. Exports have been weak, and money conditions have been somewhat tighter. And even the external capital flows, because of tighter liquidity conditions outside India, we have seen a softening in that. So despite the economy doing well, suggests that we are in indeed a very good shape and on a good wicket. Yes.
The fiscal deficit and the capital expenditure number, the capex number, which in a sense is the most important indicator. But I'm going to get one comment from Mr. Vijay Kedia. He's checking his phone continuously, which means somebody's trying to reach him. 2 minutes, 2 minutes. 2 minutes, 2 minutes. Yes, let's get a comment from you.
To me?
Yes.
Yeah. Okay, no, I think the the budget and the stock market is very much in sync. The FM has named all those sectors which are actually booming in the market.
Yeah.
So that we should understand, and it is in line with what government intention of putting India India intention to India becoming 3rd largest economy in the next 5 years. So it is in line with that.
Okay. Nilesh, the number of fiscal deficit and capital expenditure, that number we just put up on the screen. Some would say that fiscal deficit is coming down because government would be spending less or collections would be high. Or government is looking at reducing the capital expenditure. That's only two ways you can come at this number of 5.1. Is this good news for the market, and especially for defense, railways and other sectors?
No, I think it is good news. Clearly, because what the market wanted was fiscal prudence. See, look at it. The expectation was that this is an election year. The government is going to be populist. But it's not been populist at all. And prudence has taken precedence over populism. So I think 5.1 is the big picture. And that, I think, is a remarkable number. The fact that the outlay on public capex is still at 11% on a base which is so big. The base itself has expanded because the government spending on public capex has gone up at least at 20% year on year for the last 4 years since FY21. And on that base to have an 11% hike, I think is quite phenomenal. That 3.4% spending as a percentage of GDP itself is double versus where it was a decade ago.
Yeah.
So look at it from those point of view, and it's quite phenomenal. Also, I think the government has played the role of a Pied Piper by first making the investments. I think now the acceptability of the sector is increasing, and now you are going to see private capital come in and invest in the infrastructure. So maybe the government spending at 20% growth is not required. But the fact that it has spent 20% year on year for the last 4 years and now is still spending 11% is going to still now attract a lot of private capital. to the infra space. And I think that's clearly where there is prudence and pragmatism in basically the government's approach and the government's outlook. And I think from that point of view, it's a perfect situation to be in.
Okay. Sunil, I want to go back to that whole point of the fiscal deficit maths versus the capex outlay. The whole hallmark of the government essentially has been post-COVID that you've really kick-started the economic growth momentum with the help of government capex, roads, bridges, railways. Will markets be happy with this capital expenditure number of 11.1 and the fiscal deficit number of 5.1 for next year?
So, Nikunj, if you actually see, tax collection have trended up much better than what the government had expected. And I think it's a very pleasant surprise because in the past we have seen, finance ministers sort of being optimistic over the tax collections and then, falling back. Now we have a situation where, the expectations are reasonable and then tax collections have come up higher. And I think that is the reason why fiscal deficit, even in this tough year, has come in at 5.8 vis-a-vis 5.9. This is an interim budget. So, obviously all the numbers are sort of an approximation. But Nikunj, 2-3 things have happened. One is obviously the outlook on the Indian economy is great and therefore tax collection should be decent. On the other hand, you also have subsidies which have just about vanished, except the food subsidy, which is essential for a poor country like India. So there's hardly any fuel subsidy. The fertilizer subsidies have come down because fertilizer prices globally have been pretty weak. And on the other hand, because of what has happened on the investments of the government, on the PSU investments, I think the balance sheet of the country is phenomenal. So if there is any gap, I think there is more than enough room for the government to be a little bit more aggressive on its disinvestment plan and ensure that this fiscal prudence is met. There are other reasons also, you have companies like Air India, which is to eat into the government finances by making losses of 30,000-40,000 crores. They are out of the balance sheet of the government. Railways have started to launch products which are well accepted by the population, but also are profitable, like Vande Bharat. The higher fares are being accepted, and I think that makes the railways also sort of self-funded. So I think all in all, this whole, the guideline which the government had given of fiscal deficit touching 4.5% by FY26 seems to be on track. This capital expenditure, whether it is 11.1 or 11.5 lakh crores, I think we'll have to see because it's as we all know, it's an interim budget. So we should not be too disappointed that it should have been 15% growth rather than 11% growth. I think this 11% growth or a 10% growth is significant compared to the given the fact that last year we had a 33% jump in the outlay. So we have not only maintained that, we have grown at 10-11% over that. So I think all in all, I think the direction is very clear. The clarity which the government is very, very clear. We have not done too much of changes, which again is well accepted, because no one has to do anything. It's business as usual, it's life as usual. And obviously we'll have a full-fledged budget post the elections, maybe in June, July, which will lay the roadmap for the next 5 years in a more detailed manner. So, at least personally, and as a firm, we are very, very pleased with what has happened. And I think this was expected, and that's why you're not seeing any movement in the markets per se. Though the bonds have surged, the yields have fallen by 10 basis points, which is again good for the financial markets.
Bit of an uptick actually in the bonds, and at an index level nothing has changed. On the futures we're still at 21,800 plus, as the usual names which were which were in the green when we came into trade, they are the only ones which are actually holding out in trade. So it's Godrej Consumer Products still at a 9% gain, Dabur still at an over 5% gain, Shree Cement, excellent set of numbers, and it's pretty much been a sectoral trend. We all saw what ACC Ambuja did. Shree Cement still holding up 4%. Maruti has jumped up quite significantly, 3.6% higher, and Marico as well higher by about 3%. I'll come to the losers list in just a bit. But Mr. Kedia, you should be happy. Tourism got a special mention. Your Kulja Sim Sim pick was Indigo.
Yeah, of course.
Will you add more?
No, I will not add more. I wouldn't like to increase my costing, So I'm happy with whatever is the outcome of the budget. And so I'm happy about it.
Any new ideas hearing the finance minister today that you got?
No, nothing, no new idea, because I was not expecting any new idea to come also. So mantra is same, all season mantra is one only, that सोच कर समझ कर invest कर, rumor पे टिप्पे ना time waste कर, knowledge और patience का business है ये, long term की सोच और rest कर.
एक चीज भूल गए कुछ भी करो 18 नाउ देखो ये लाइन तो पल्ला भूल गया
और अपने कविता को 18 नाउ पर टेस्ट करो.
By the way, you
Full
always tell
marks
me
on your test.
Okay, Prashant, you always tell me that DT Now is a favorite channel.
Oh, yes.
Why is that?
Because of
A lot
us?
One reason for me personally, when I enter ET Now studio, I feel energetic. It's something in a different mood. And I like, Nikunj is a fantastic
What about
guy,
Aisha?
always relaxed.
What about
Best
Aisha?
friend.
Of course, she
Yeah,
is
pair,
a
you
pretty
go.
woman, young woman, and it's amazing to be in the studio, and I feel so comfortable.
So we are blocking you for the next budget already. I'm coming to you, but Sunil and Prashant, we have this nice little game which all of us have played called Khulja Sim Sim. All of us have played this game called Khulja Sim Sim. Are you both ready for it? And I can see that, the backdrop at Sunil Bhaiya's, there is already a Saraswati and there is a Ganeshji. So, he's got a little bit of spiritual feel also going. And with Prashant's firm, I'm saying that it should not be 3P, it should be 4P because he's invested in PSU stock. So, ho jayega firm ka naam, because that 4th P is done very well for him. So, I'm going to open a Khulja Sim Sim. And Khulja Sim Sim is something which is an idea or a theme somebody is very bullish on. So, I'm going to just open the Khulja Sim Sim first for Prashant Jain. So Prashant Bhaiya, what do you think will come out in your Khulja Sim Sim when we will open it for our viewers?
I think these are fairly valued markets, and I don't see any low-hanging fruit, to be very honest. I mean, the multiples at which these markets are trading. I still think banks that have lagged should do well in this cycle because balance sheets are healthy. Credit should pick up. And so I think large caps and banks I would prefer.
The Khulja Sim Sim, Prashant Bhaiya, is yours is just about getting ready, Prashant. So I'm going to go to Nilesh. And Nilesh is also just about getting ready. Budget day, the speeches got over slightly early. So I think they're just taking some time right now. What do we have now? We have the Khulja Sim Sim of Nilesh Shah. And Nilesh's Khulja Sim Sim has Heritage Foods, Mahindra Holidays, and Home First. So this is what the Khulja Sim Sim of Nilesh Shah contains. I like the line, Nilesh. And I like the ideas in it. Heritage Foods, Mahindra Holidays, and Home
Nilesh
First.
is always about consumption. Home First is a new one though, right?
No, it's been there. We've been owning it for some time now. But clearly, I think in this budget also there was a very strong focus on mid-income housing.
Yes.
And clearly Home First is at the forefront of that. It is a high-quality lender, has been very capital efficient, credit cost contained, has been using technology to essentially reach out to their consumer segments and evaluating credit. And therefore, I think on the whole, it's pretty much, you could call this a new age company in a conventional business.
Now the Khulja Sim Sim of Sunil Singhania is also ready. And we've not spoken to Sunil Singhania. There's something which even Sunil doesn't know what will happen because जब संदूक खोलते हो तो पता नहीं होता है ना अंदर क्या होता है. Nobody knows what comes out. So Sunil Bhaiya, let's use the word digital locker. Right? Everybody is using the word DigiLocker, so I will use the word DigiLocker. So what do you think if I'll press the word and the code word is India, right? So on this DigiLocker which belongs to Sunil Singhania, I'm going to write India. So what do you think Sunil Singhania will come from Sunil Singhania's DigiLocker?
No, I think be positive will come out. I think last 20-25 years, whoever has been positive on India has had good health, good wealth, and a lot of smiles. And I think we have entered a phase where consistency in terms of governance.
Okay, so let's open it up.
No, it's practical. Nothing is theory. Ultimately returns. Returns are made by being consistent, being simple. I think we try to complicate matters too much. But it's the same thing, nothing has changed. I think we continue to be optimistic on, I agree with Prashant, large cap financials have not performed. I think they are set. We will continue to believe that massive investments is going to happen in variety of sectors, whether railways it will continue. Now we have solar rooftop, which will continue. So I think a lot of these companies which are normally not favored might come into favor. The way PSUs came into favor last 2-3 years, I think the engineering infra companies will be in favor. And at some point of time, particularly the discretionary consumption has lagged. And I think as India moves ahead in terms of GDP, the disposable income will rise. I would say the want-based consumption names look pretty good from a 5-10 years perspective.
Simsim, what we actually had planned for Sunil Singhania is this, and Sunil, you may want to see this recording later on, you're live right now, is manufacturing and large cap financial. These are two themes which we thought Sunil has liked them. If you want to look at your declare portfolio also, that's a bent which seems to be clearly there. Now the Khulja Simsim of Prashant Jain is also ready, the DigiLocker. And I would again write India here, the DigiLocker of Prashant Jain. So Prashant, what do you think will come out of it, apart from PSUs?
As I said earlier, I think India's capital formation is growing faster than consumption, and which is good for us. That's a sustainable way to grow. Large banks have lagged in India, and I think they will do well. So anyone who, and as you can see, given the last NPA cycle in corporates, many banks have defocused on project financing. I think that's a space that will grow in any institution, any bank or NBFC that focuses on that space. I think there should be very good growth in that opportunity. So I would favor large banks, NBFCs focused on funding capex in India.
The word which we were looking for, Mr. Jain, was power. Another P to your firm's name, PSU and power. Though 5 P ho gaye. 3 P which represent your firm, patience, prudence, perseverance. Then it's PSUs, and then it's power. This Simsim has got some magical effect, Mr. Jain. Everybody is Simsim is getting all the thoughts right today. Right, Mr. Jain? Power is what?
Nikunj,
tell us why.
No, your thought process is commendable, and your observations are very interesting. I think, see, power space it will grow for sure, and power demand in India should accelerate as incomes grow, as electrification takes place. Even AI will consume a bit of power. But we must appreciate that this is a business with fairly controlled ROEs. And I think this sector is re-rated. It's not expensive, but I would expect the re-rating to take a pause. And I think compounding returns should continue in this. And that's why I did not mention this.
Okay, Prashant, Sunil, we'll let you both go. Thanks as always for taking the time out and joining us for a quick budget reaction there. I also want to introduce our budget think tank, experts who you got views from pre-budget, and they're back with us analyzing the budget. We've got Shashank Srivastav joining in on the show. We've also got Ashok Tyagi joining in. Shashank, I know you've been waiting long, but let me tell you, your Khulja Simsim is already powering ahead, right? Maruti was the top nifty gainer in the morning also, and right now it's status quo, 3.5% on fire.
So I was just wondering, if you had my DigiLocker, it would be just like India's economy, AAA, auto, and auto.
Yeah, auto, and auto it is, because all the gainers in the market today are all auto names, powered by your autos company stock. That's actually holding up very, very smartly indeed in trade. But Mr. Tyagi, if I could get you in on the discussion as well, a lot of thrust on affordable housing, but you're not in the affordable housing sector yet. Plans to diversify?
Well, firstly, I think one thing which I think all of us, possibly including you and Nikunj, got wrong was the length of the speech. This was the shortest speech that I've ever heard. So, frankly, I think apart from the affordable housing, her emphasis on this new middle-class housing scheme, the details of which obviously we'll see in the fine print, I think that could be of interest at least for some land parcels. So let's see what sort of it unfolds in details. I mean, the two big themes, as I mentioned in the morning, which I think continue to be beneficial for the real estate sector. Clearly the continued fiscal discipline, which should hopefully mean of moderation in the interest rate scenario, because that impacts the home mortgage big time. And the second is the continued emphasis on infra building, which again has a downstream, almost a osmosis-like impact on real estate. So I think those two were clearly important developments. And clearly, let's see the details of this middle class housing scheme that she mentioned too.
Yeah, absolutely. I just want to check in on what real estate as well and some of these, infrastructure plays as well are up to. Let's bring up the stock of DLF. Let's see what an Oberoi Realty, what a Macrotech developers and Keystone developers as well is up to currently in trade. And then, of course, what are the likes of NCC, NBCC, all these players are up to. Real estate is a little tempered in today's trading session. But yeah, NCC as well is seeing a crack. But there you go, NBCC pulling up the magic. That stock still holding higher by about almost 3% odd. Purinja, to your mind, any new themes which emerged given the current market construct, given the intent which was put forth by the finance minister today?
To be frank, from the budget, I didn't get any takeaway to look at a particular kind of stock or a vertical.
Yeah, but it always builds your conviction, right? She talked about tourism, affordable housing. If you own those stocks already in your portfolio, you're like, you know what, this is a good call I took. Maybe on corrections, I'll add more.
Now, more than stock, now this tourism, I think the tourism hubs, formation of tourism hubs made by the finance minister, I think it's a very important idea, even though we may underplay that theme. Now, that kind of hubs and, even religious tourism or pilgrimage tourism, India has a huge scope with international airports and a lot of, sufficient infrastructure. A proper tourism development can add 1% to our GDP eventually in the long run.
And who would know it better than you? You belong to God's own country,
oh, yes.
Kerala.
Kerala, of course.
You would know the importance of tourism.
I think it's very important for the investors. There could be many stocks. I don't want to name anything. Nothing comes to my mind in particular.
You can name it, it's okay. We don't stop people from
It's good. We have the...
Nilesh, have you ever stopped anybody? Exactly. Aisha will not stop
We have
anybody.
everything starting with Indian hotels and, Oberoi's and a lot of them, and many small ones are coming up smartly. There could be multi-baggers.
So what could be a multi-year tourism bet? I'll ask a simple question to you and Nilesh both.
Nilesh.
So my view would be, we already own Mahindra Holidays, which is partly tourism or hospitality. Directly the way to play tourism, I don't think there's a direct way, but indirectly you pay it by owning a bunch of hotels, bunch of resorts, airline companies, online travel aggregators. These
Which one do you own?
No, we own Mahindra Holidays for now. We used to own Ease My Trip some time back, but obviously we've exited out of Ease My Trip, but we continue to own Mahindra Holidays. We've been owning it for a while now, and we still continue to like it. I think there's tremendous potential for it. The cash flows to keep building and adding on to their inventory of resorts. So I think it's wonderful.
Purinja, your idea?
EIH looks like a very good bet. I'm not owning it. Because
EIH is Indian hotels.
No, that's our Oberoi.
EIH, sorry, my bad. That's IHCL. What's wrong with it?
They have not been expanding rapidly in the past, but now with the new things opening up, why not they have something in Ayodhya, something in kind of places
That's
coming up.
That's luxury tourism.
So there could be a hub and that circuit of tourism places in India. We have very, very big potential to grow in that area. Absolutely. It will have overall impact on the economy.
Okay. Navneet Manot is also ready. I'm just going to go in a minute from now. But I want to get one reaction from Shashank Srivastava and the same question perhaps for Mr. Tyagi. Shashank, let's be clear that while we may talk about the long-term visibility for Indian economy, we have a problem in the short term to deal with, which is the rural economy. Which is that 20% of the consumption in India, 80% of the consumption in India is driven by 20% Indians. That's growing. But that remaining 20% consumption in India is driven by 80%, which is not growing. Now, Maruti does have a touch point in terms of the rural impact. Nothing has come in this budget, which really could be called as a booster shot for the rural economy. Shashank Srivastava.
Yeah, so you're right, actually, because, for automobile, the rural contributes about 32% of the overall sales, and for Maruti, a little more, around 43%. It's obviously very important. But one good point we have seen the last 17 years of data that we have been tracking, a rural versus urban. Rural growth in auto is always exceeded the urban growth. Although at a much lower volume levels. In fact, this year also, rural growth around 10.8% and 8.3% for the urban areas. So I think there is rural is a very important part as far as auto is concerned. But I'm not so sure that there is nothing in this budget for the rural economy, because I think the direct financial support, which is continuing, as also the crop insurance for the farmers. You also saw a large development of digital infrastructure, which has benefited, the national agricultural market. You have now more than 1.8 crore farmers participating there. So I think there is a lot of continuity, and I think that has been the big point about this budget. And we mentioned it in the morning session. We would like the continuity is happened, whether it's on the focus on the growth or the inclusivity that we saw. She talked about Gyan, which is Garib, Yuva, Annadata, and Nari. And I think that incorporates, obviously, the rural areas as well. But really, for me, the outstanding part of today is budget, although it looks like continuity without any major fluctuations, as expected, was the confidence levels in the Indian economy and the performance so far in the future ahead. I think the forward-looking confidence it seems to me to be the really big takeaway from today's budget speech.
Mr. Tyagi, that same question to you. While we may talk about India growing, doing well, there is a crack, and that crack is the rural economy. 20% of the Indians drive 80% of the consumption. 80% of Indians drive 20% of the consumption. That 80% in terms of mass pool has perhaps got nothing populist or a booster shot. Would you agree with me, Mr. Tyagi?
There was clearly, I think, a mention about the reinforcement of rural housing, which I think will be a direct, a direct impact in the rural areas. B, you are right. I think, I think it's a question of fiscal rectitude, but the government has, I think, had the option, but has chosen to not go down the path of excessive, you can call it populism, you can call it benefit mechanism, focus on the lower end of the economic chain. I think they would maybe wait for the June proper budget to happen. But yes, I think while we don't necessarily operate in the rural markets, but clearly the lower end of the pyramid does need help, I think, across both rural and urban segments. And I'm assuming that once the government presents the full budget in June, I think they will start, addressing that piece once all over again.
Okay, now the devil will always in the fine print, and better than when you go to the Deloitte team to really understand and help us navigate the fine print. So the fine print, Haji, is there a devil in the detail this time? Always Deloitte has that answer.
So we're still looking through the fine print, and there does seem to be some changes over there. Most importantly, I think what was really nice was that the finance minister started off quoting a survey that we did on GST, where she talked about the success of the GST implementation. That was a survey of almost 600 companies around India, and it got quoted in the budget speech. With regard to some of the other changes that we are seeing, there seems to be some tinkering on the rates of TCS, as many of your viewers would know, is that last year and the year before last, there was this TCS that was imposed on foreign exchange remittances. Now that TCS was applicable, at 20%, which seemed very, very high. Obviously, you could file your tax return and claim a refund of the TCS, but it was a very high rate, and there was a lot of criticism around that. It seems that that rate is coming down in many of the categories to 5%, so from 20% to 5%. The other thing that we are picking up is there seems to be some tinkering about the way agricultural income is being calculated, but we are still looking through the fine print on that.
So if TCS rates, they go down, to put it very simply, when you're traveling abroad, you'll have to pay less.
Yes. So remember the TCS, there was this controversy that happened around whether it would apply on credit cards as well. They excluded credit cards from it. But it does apply on exchange that you buy either in cash or loading on an exchange card. And over there, the TCS on that was 20%. There were exemptions for certain categories like medical, for instance. Education was an exemption. And over there, it was there was a kind of a limit of 7 lakhs where it did not apply, and then it went up to 20%. Sorry, it was 5%, and then it went up to 20% straight away. So now it seems that they're bringing that 20% down.
It is back to 5% now.
Right.
It's going to be applicable from July 1st.
But can I say that since there is a specific mention by the finance minister, no changes in direct taxes and indirect taxes, you will have an easy evening. Aaj kaam kam rahega, budget hai fir bhi.
Well, we're still trawling through the details, so we should find out soon.
And you know, I still remember that announcement of that 20% jump in TCS had come the day 2000 was also the demonetization.
This is Aisha's third question on TCS. Planning to travel abroad or something?
Just checking. Because I remember the big talk in the newsroom also was on this particular subject.
Right.
No, but why to get into this? You know, travel to India, Kochi, Ayodhya. TCS के मैं सोचना ही नहीं पड़ेगा.
The other big thing that I really saw coming out of her speech was, and I'm probably calling it loosely because I've not seen the scheme yet, but I call it a PLI for R&D and innovation. And that's the 1 lakh crore funding that you are getting for
Vigyan and Anusandhan. She specifically mentioned that. There is a special mention also on states giving credit to the tourism sector at a cheaper rate.
Yes.
Is that something which is significant?
No, so tourism is a natural thing which really boosts GDP, especially in some of our tier 2 and tier 3 cities. And I think they've used it very smartly with the expansion of air connectivity into some of these towns. I think that will really pick up the GDP in those areas.
All right, Shantanu Ekabram joins us now, and let's get her views on what she makes of the budget, both in terms of continuity, the messaging, and also how should markets really look at it. Mr. Ekabram, good afternoon. Thank you for joining us. Your first reaction, how would you summarize the budget?
Hi, good afternoon. So this was a vote on account, and not much was expected. But despite that, I'd say there are 3 or 4 key things. First, the fiscal deficit. The roadmap to fiscal deficit to 4.5% in FY26 is good. That's what they were looking for. While it will be 5.1 for 25, there's a roadmap to, below 5% in FY26. So 4.5 in FY26, which is good. Second, the continued investment and outlay for infrastructure. Interesting, 11.1% increase to 11.11 lakh crores. It goes one all the way. And I think if you look at it, it is across, it is railways, it is roads, it is ports, and every kind of infrastructure that you can think of, which is, I think, extremely important because then only India can be on the move. Third, I think there was something expected on housing. While I haven't read the fine print, but I think they are talking about a lot more about housing and the benefits to housing. So that will be a boost to the sector, which is already doing reasonably well. Fourth, less crowding of the private sector because
there's a bit of an audio issue there. So I need to go to Navneet. Navneet, good afternoon. Thank you for joining us. Navneet, do you think the broader message is actually for the bond market? Because A, the assumption of fiscal deficit number, B, which is much better than what everybody thought and expected. And on top of that, you got India's bond inclusion, which would be at play somewhere in June or July 2024. So do you think there is a very big, strong message for the bond market here?
There is a message not only to the bond market but to every section of the society as well as to the wider world that India is in Amrit Kal and we are determined to build a Viksit Bharat in this Amrit Kal. So of course you are right to pick that given the path of fiscal consolidation and doing better than the budgeted number on fiscal deficit in an election year is commendable. We have seen that before also in 2019. And I think government remains firmly on the path of fiscal consolidation because that's critical for long-term macroeconomic stability and financial stability. I think this will give more space to RBI to have comfort on taking a view on rates and liquidity going forward. So you are right, but I would say that it is not only for the bond market, but for every investor, for every industrialist, for every industrial worker, or every section of the society, not only in India, but to the wider world.
Navneet, specifically on the capex number, because that in a sense has been the hallmark for the government in last couple of years, how the uptick in the economy has come largely because of the multiplier effect of the government spending. The assumptions for next year, they barely are in double digit, like late double digit. Is that impressive enough? Because suddenly a 30% number comes down to 10-11%.
So you have to look at the balancing between the fiscal consolidation and the right kind of spending. So what the finance minister has tried to do is inject cash where it's needed, which is infrastructure, which includes not only the physical but also the digital and social infrastructure, and inject confidence into other parts of the economy where they can also go ahead and spend more. So households through real estate and the other investments that they can make, and the private sector businesses who should now look at a better growth prospects over the next several years, policy continuity, the ease of doing business, and the higher growth prospect, which should give them more confidence to invest more. So I would say I think they have injected right amount of cash to build infrastructure and have injected right amount of confidence to the private sector to do equally investing with a confidence.
We've always read your annual letters with great interest. And I recall last year it was about AI. AI was the big theme that dominated all of 2023. And this year's annual letter has talked about health technology. So we can't let you go without talking about one theme that you're betting big on. Tell our viewers why you think health technology is going to be it for 2024.
I think India has leapfrogged on the digital infrastructure. We are absolutely best in class in the world. It is a first world infrastructure. On the physical infrastructure side, we are moving at a very fast pace. I think I wrote RRR, roads, railways, renewables. We are moving in that direction, and over a period of time, other spheres of physical infrastructure. But what the digital infrastructure can do, things like Abha, things like, Bhashini, things like the health stack and the India stack coming together. And over a period of time with other innovations that are happening globally in the space of healthcare, there is a possibility that what we have seen on digitalization of finance in India, financial inclusion, something similar we can see in the area of healthcare over the next 3-5 years, where we can just leapfrog. What we couldn't achieve in 70 years, we can achieve in next 5 or 10 years in a short period of time, the way we have seen in India stack and what it has done to the digitalization of finance. So healthcare could be one area, followed by education. I think the social security net that we are putting for 800 million people in India, which is like a free LPG, a free toilet, a basic electricity, one LED bulb, things like Ayushman Bharat, PM Kisan, and all of that, put together can create a new set of consumers for next several years in India who will be more industrious, more ambitious than dealing with the basic challenges of life. I think that is a bigger theme for. It's taking time. I was hearing Nikunj few minutes back talking about the slower growth on the rural as well as on the agri side. But I think if we continue to build the infrastructure at this pace and build a high quality social security net, at some stage the consumption growth will also follow.
I want to look at the impact on the PSU banks. If interest rates they come down, PSU banks will make more money because of bond portfolio. I'm simplifying it for our viewers. SBI runs a bond book. When interest rates they come down, there will be mark-to-market bond advantage. When interest rates they come down, PSU banks with large bank exposure, as in bond exposure, they will tend to make money. So I will not be surprised even without looking at the screen. Trust me, bonds would be up. There you go. Bank of India is up, Canara Bank is up, SBI is up. And as it is, these stocks are in a momentum groove. The market is simple. When something is in momentum, it will remain in momentum till the time any external force is applied. And right now, the external force, I think, for banks, I think is that it's getting a booster shot because of capex. It's getting a booster shot because of liabilities. It is getting a booster shot largely because of what is happening in the bond market. Have I said all the correct things for PSU banks?
Oh, absolutely. Totally. I mean, and look, this...
Have I convinced you to buy it with this pitch?
That's a separate...
Does he not already have them?
But the path to fiscal consolidation has probably, it's been underway. It will continue for another year or two. And that's when they basically become the biggest beneficiary. It's actually one of the hedges against any NIM compression that they may have. That's one. Two is, who knows, post the elections, IDBI Bank, which is already scheduled for privatization. If that happens, that itself could be the next trigger for a re-rating of PSU banks.
Last 5 budgets, Aisha and me have just said one, that something big will happen in divestment. This time we didn't use it only. I think markets have given up now.
Yeah, so that's the best time, right? Isn't that the best time when we all give up? That's probably, I mean, from an equity market point of view.
And their valuation is so perfect.
Absolutely.
I mean, it's the best that the government could
A year, 2 years back, everybody had given up on the PSU stack. But look at the rally in PSU stocks. So I think things happen when you probably expect them the least.
And
so who knows?
That's your expectation for ONGC as well, isn't it?
Yeah, I think those stocks could be the next 1-2 years, will be leading the PSU OPEC.
I'm going to ask
because of the low valuation.
Fair point. And you only own ONGC, you don't own any other PSU stocks?
We have BEML since last 3-4 years in PMS we are holding.
Okay. I'll ask you a very different question, which is based on the revenue growth assumption. Revenue growth assumption last couple of years has been very conservative. Nominal GDP is about 13, revenue growth assumption is 10 to 11. Is on a high base, a 10 to 11% revenue growth assumption a decent assumption?
So remember, we already have inflation, which is there, and then on top of that, you need the growth, right? The GDP growth. Now, I would say that the assumptions are conservative. If I were required to give projections for the next year, you tend to be conservative. But look at the base effect that is happening. What is happening is, one, incomes are rising across India. Two, number of taxpayers who are coming into the taxpayer are increasing. So that effect is difficult to quantify and it's difficult to measure. So I feel a lot of the excess that is coming now. So earlier we used to attribute this excess primarily to better profits of corporates or to better TDS. But remember, this rally is not coming in corporate tax. It's coming in personal tax, 27% above and net of refunds. So that means we are seeing a significant base of individual taxpayers growing in the country, and that's a function of growth in general GDP and growth in the absolute number. And we still have to see the full effect of that because, as you know, we have the benefit of demographics, and that's now starting to kick in. So that's showing its face in tax collection.
And Navneet, all that taxpayer money, all the savings is finding its way into financial instruments. Who would be happier than you?
I think I couldn't hear you fully, but I think you meant financialization of savings, right?
Absolutely. And the numbers are proof, right? Be it the demat account additions on a month-on-month basis or the AUMs under mutual funds.
So that's a structural trend. We have a long way to go. These are early years of higher financialization of savings. But given the low penetration, I think there is a huge runway of growth for all of us in mutual funds. I think as we convert financial savings into the investments and enhance the productive capacity of the economy, channelize those investments into the more productive sectors, there is higher growth which leads to higher income and higher savings which get converted into investments, and we get into a virtuous cycle. Incidentally, today is the 30th anniversary of HDFC Balanced Advantage Fund, and when people ask about a multi-bagger idea to you, you can tell them that 1 lakh rupee has become 1.5 crore over the last 30 years, or a 10,000 rupee per month SIP has become almost 15 crore rupees. So the multi-bagger idea is betting on India and betting on the right manager through a mutual fund product.
The finance minister also said FDI, first develop India and rise with India, like we say, Ariti now.
You know, it is just such a true representation of where the economy is headed. I mean, you know, from, let's say, an emerging market to always been compared with China and then losing out on all front. Today, China is losing out to India on all front. And most of the global economies are losing out to India on all front. So just imagine the nomenclature, the opinion, what it has changed. You know, we've lived through it, Aisha. We've lived through it. Just think about it. What were the number of demat accounts in 2019? What was the SIP collection in 2019? You know, there was a time when FIs would sneeze and markets would catch a flu. Last 1 year, FIs have only sold. And markets have still gone higher. They've sold stocks worth 20,000 crore. DIs have bought stocks worth 1.7 lakh crore. This is a different India. Rise with India, but more importantly, equity investors, stay with India. Yeah. I think rise of India has to become stay with India.
Absolutely. But Nilesh, what's keeping FIIs away?
No, I think for them there are two things. One is their own home markets are also doing well enough. So if you look at maybe the NASDAQ or maybe the US equity markets over the last 1 year itself has done very well. Second is not till December, but at least prior to that, they were waiting for essentially the May election outcome. Till the state elections didn't happen. The state elections, of course, have basically converted some of the fence sitters, but I still believe there are some who are sitting on the fence as yet and will still want to wait for maybe the May election outcome. The third, of course, is the whole geopolitical risks and the expectation that that will impact crude oil prices and therefore that will impact India's trade deficit and the inflation and all of that. So there are these whole set of factors which are pulling them back. Lastly, but most importantly, is I think some of them are still evaluating whether China continues to be a better value play because China has underperformed so much.
Yeah,
it's fallen so much.
It looks a little unbelievable that they've not managed to pick it up till now.
So maybe China markets trade probably in high single digits. India trades north of 20 times. So some of them are really trying to take that view that do you want to probably overpay for certainty or you kind of want to buy something at a more attractive price where there is uncertainty, but it will probably... So I think these are a whole combination of factors. So I don't think it's anything against India that they think that they need to sell or not invest. But I think it's just a bunch of these things which are still probably holding them back. The real test will be post-May. Because post-May, I think what will really happen is that they will see India now as the next place of stability for another 5 years. And that's when really the big money can actually come in. I think the big thing we have to keep in mind is that India, unlike China, is still kind of part of a regional allocation. It's still part of an EM allocation. It's not yet a country allocation. While China became a country allocation long back and that brought in billions of dollars. India is yet to get that stage and I don't think that day is too far away.
Bhasin Saab is there. Hello sir, good afternoon.
Before we go to Bhasin sir, I have to take one question so that our viewers can win the smartphone. Okay, so while we are definitely going to get you those stock ideas and we won't keep you away from Sanjeev Bhasin for too long, but here's your chance. Be part of the Budget Master 2024. Answer this very simple question and who knows, maybe you can win a smartphone today. WhatsApp your answers to 888 59273. And the question we're asking is, who are ET Now's top chartists? That's technical analysts. Your option A is Nilesh Shah and Saurabh Mukherjee. Is it Kunal Bothra and Naresh Mirani? Or is it Sumit Chaturvedi and Sumita Kareen? I'm sorry, but yeah, I'm finding it a little humorous with the options that we have. Or is it Soumit Sarkar or Vinny Motiwala? I think the answer is that obvious that I'm already cracking up on this. So if you know the answer, hurry up, WhatsApp us, and who knows, maybe you could win a smart, fancy smartphone. Don't divulge the answer, even though it's really obvious.
That will be called as insider trading. So. No. Let's take a break.
I say your laughter gave away the
नहीं, मैंने आंसर पे नहीं आ जाता, उसके बाद वाले ऑप्शन पे आ जाता, because वो हमारे रिसर्चर थे.